I keep hearing about the VIX and the Fear and Greed Index. What do these actually tell us about the stock market?
They measure the mood of investors. When people are scared, prices drop. When they're greedy, prices rise. These indicators help you see if fear or greed is driving the market right now.
So the VIX is called the fear gauge. How does it work in plain English?
The VIX uses option prices to predict how much the S&P 500 will swing over the next 30 days. A high VIX means investors expect big drops and are panicking. A low VIX means calm and confidence.
What's a typical number for the VIX? When should I actually worry?
Usually it sits around 15 to 20. Above 30 signals real fear, like during a crash. Below 12 shows extreme complacency. It's not a timer, but it tells you if the crowd is scared or overconfident.
And the Fear and Greed Index? Is that just a simpler version of the VIX?
Yes, it combines 7 signals, including the VIX, put/call ratio, and market breadth. It gives a score from 0 to 100. 0 is extreme fear, 100 is extreme greed. It's a quick snapshot of the overall mood.
What's the put/call ratio? I've seen that mentioned but never understood it.
It compares bets that prices will fall, called puts, to bets they'll rise, called calls. When puts outnumber calls, investors are bearish. When calls dominate, they're bullish. Extreme readings often signal a turning point.
So if everyone is super greedy, should I sell? And if everyone is scared, should I buy?
Not automatically. Extreme greed often means the market is overbought and due for a pullback. Extreme fear can mean a bargain. But you need other signals too. Sentiment is context, not a crystal ball.
Can you give me a real example where sentiment really mattered?
In early 2009, the VIX spiked above 80 and the Fear and Greed Index hit near 0. Everyone was terrified. But that was the bottom. Investors who bought then saw huge gains. Sentiment screamed panic, but the market was about to recover.
What about the opposite? A time when greed made people lose money.
Late 2021, the Fear and Greed Index stayed above 80 for weeks. Crypto and meme stocks were soaring. Then 2022 hit, and markets fell hard. Greed made people ignore fundamentals and buy at the top. Sentiment warned them, but they didn't listen.
How can I check these indicators myself without feeling overwhelmed?
Just glance at them weekly. You can see the VIX on any finance site, and the Fear and Greed Index is free on CNN. Don't check daily. Just note if it's extreme. That's enough to keep you aware of the crowd's mood.
What's the biggest mistake beginners make with sentiment indicators?
They treat them as buy or sell signals. They see a high VIX and panic sell, or a low VIX and buy everything. Instead, use them to size your positions and set stop losses. They help you manage risk, not predict the future.
So what's your practical takeaway for a beginner investor right now?
Check the VIX and Fear and Greed Index once a week. If they're extreme, be cautious. If they're neutral, stay the course. Always combine sentiment with fundamentals and your own plan. Don't let the crowd's mood make your decisions for you.
That makes sense. So sentiment is like a weather report, not a forecast. Thanks for clearing that up.
Exactly. It tells you if it's stormy or sunny, but you still need to pack your own umbrella. Use it to stay calm and disciplined, and you'll avoid the biggest emotional traps in investing.